So Chipotle announced their earnings yesterday, and the stock was muted in terms of when it closed for the day. It did gap down only to find buyers and push price higher to end the day off the lows. This was after news that the company said that their comparable sales slowed down in January. Now, we need to do some reconstruction. We're going to go to the weekly chart. This was a head and shoulder until price found buyers down at that 56 level and pushed price higher. So let's take off this head, let's take off these shoulders, and we're going to be left with the current price action. Again, you have a daily buy level at $56 and another daily buy level at $54. Now, before I show you those levels, let's look at the actual results from the earnings call. So shares of Chipotle, they fell in pre-market. Again, opened in pre-market and fell after the burrito chain flagged a dip in comparable sales in the opening month of its current quarter. The CFO, Adam Reimer, said demand in January has been negatively impacted by the New Year's Day holiday, falling in the middle of the week, which led to more people going back to work and school a little bit later than usual. Along with, unfortunately, recent wildfires in LA, Reimer predicted that this trend would dent Chipotle's comparable sales by about 400 basis points. That's about 4% in January. The figure in the first quarter is subsequently tipped to be somewhere around flattish compared to the year ago period. Now, comparable restaurant sales increased by 5.4% compared with Wall Street estimates of 5.6%. In the corresponding period last year, the figure had come in at 8.4%. Chipotle also noted that the effects to expand portion sizes push food, beverage, and packaging costs up to 30.4% of the total revenue. And that was up from 29.7% in the fourth quarter. So their input costs went up a couple of percentage points. All right, getting back to the charts, and I want to drill down to these two levels that I referenced. So in order to do that, we've got to go to the daily chart, and I'm going to pinpoint how the level was formed. All right, so this is called a level one level, and typically, if you've been following my videos, when you have a level, you want to put your entry in the middle, and you want to put your stop right below, in this case, below that pivot low. And as you can see, price rallied, formed two basing candles, meaning some indecision between buyers and sellers, until there was an imbalance which pushed price higher. Right, so this push higher meant that some of those buy orders didn't get filled. So as price trickled back down, filled the remaining orders before pushing price higher. Now the reason why price dipped and pretty much closed below the level is because most of the buy orders that were unfilled got filled with this most recent dip, which penetrated the zone more than 50%. However, if you would have went long in the middle of the two levels, that would have been a great entry, and just kind of putting your risk to reward that would have been good for almost a 4-to-1. Now, how do you know when price reverses? Well, you have price making higher highs, but your RSI, which is a momentum indicator, made an equal high. That was one indication. The other indication was a break of this pivot low. But had you waited, you would have lost a lot of profits on this candle here. So those are just two ways to tell. Now, current price action is sideways, and so you wait on your hands. This is a great level to get long, or if price doesn't trickle down, you get a breakout and then the potential retest to go long. Thanks for watching. Subscribe, please like the video.